Tonight, First Issues brings you a special program, the announcement of FNB Botswana's half-year results.
Welcome to FNB's half-year results presentation. This year, as you know, is our 42nd results presentation since we are 21 years old. We, as you know, have been doing this, myself and Stephen, for the last 8 presentations. This year, we decided that between myself and Stephen, you have seen enough of us, so we want to show our other talent in FNB. And this year's presentation will be done by my Deputy CEO, Mr. Richard Wright, and by our new CFO, Mrs. Boitumelo Mohopa, whom we have introduced to you in the media. This is Boitumelo's first results presentation. Welcome, Boitumelo, to what you're going to be doing for a while to come.
The half-year results announcement of the First National Bank of Botswana on the 15th of February this year held great lessons on the importance of a good strategy for an organization's ability to thrive even in the most adverse of conditions. Tonight we take you through not only the facts and figures regarding the bank's performance over the last 6 months, but find it reveals a dynamic reflex response that was created within the economic recession. A talent that has yielded consistent growth since an initial dip in profits in 2009. I am Namezo Sibina, and this is First Issues. Welcome back to First Issues. Financial pundit Richard Rummelt argues that at the heart of every good strategy lies insight into the true nature of a situation, into the hidden power of a situation, and into an appropriate response. And with regards to insight into the true nature of the situation, Deputy Chief Executive Officer of First National Bank, Richard Wright, gives us a picture of an economic climate where the International Monetary Fund has predicted that economic recovery will be slow, governments around the world are tightening their belts, and of a reported decline in local GDP growth over the last 6 months. A situation in which he says the consumer is under pressure.
The IMF GDP projections for 2013 is that the emerging markets will grow at 6.1% in 2013. The advanced economies is anticipated to grow at 2%, and the world economy at 3.9%. Now, bringing this closer to home, the IMF projections for the sub-Saharan Africa is anticipated to be at 5.5%. The SADC growth forecast up to 2017 for the next 4 years, it is indicated that Botswana will grow at approximately 4.25% for the next 4 years on average. And as you can see, it is at the lower end of the SADC countries. As at September 2012, the economy grew at 5.7%. What is interesting to note is that the non-mining sector grew at 11.6%, whereas the mining sector contracted by 12.5%. Inflation, as at December 2012, was recorded at 7.4%. The Bank of Botswana believes that inflation will be below the 6% mark by the third quarter of 2013. In respect of interest rates, the bank rate was cut in December 2010 to 9.5%, thus reducing the prime rate to 11%. The Bank of Botswana certificates market rate pulled lower in November 2011. It recovered, but stayed lower than before the correction. And as you can see, that interest rates remain at their lowest levels for the past 20 years.
A good course of action must be multi-pronged to nurture and protect all the segments of a corporate body, to ensure that all systems are running smoothly and are able to implement the formulated plans. The Deputy CEO went on to share the bank's strategic response with regards to their different stakeholders, in which he says they shot the light out in their goal to improve engagement with staff, seeing a spike of 81% last year from 59% in 2011. The bank aimed to deepen its relationship with their consumers and saw a growth in number of active clients and an average of 3.4 products used per client. For their shareholders, they aimed and succeeded in presenting a well-diversified advanced portfolio. And with regards to credit risk, a concentration on secured advances and less on unsecured advances, and a centralization of collection procedures resulted in the desired quality lending book. And the bank's efforts with regards to the loan-to-deposit ratio saw an improvement to 74% on the balance sheet. This litany of successes continues even into FNB's relationship with its board, and Richard shares with us some of the measures implemented in this regard.
In terms of board, our strategy has been clearly to prepare the bank for Basel III. We have introduced and bedded down King III within the organization. And in the last 6 months, we have strived to improve efficiencies within the organization. We've introduced a new collection system, as I previously discussed. We're in the process of bedding down a new credit platform. And we have bedded down the account opening optimization platform, which is a new front-end system within the bank. And we continue to focus on internal audits and in corporate governance within the business.
Before we have a one-on-one conversation with the Chief Financial Officer at FNB, Boitumelo Mogopa, let's take a look at some of the more noteworthy facts and figures from her presentation, beginning with the overall profits before tax generated by the bank within the last 6 months.
In the last 5 years, FNB has been growing in terms of profitability. If you look at the slide, from your 200 million to where we ended in December 2012, about 450 million. Very, very impressive result from where we sit, in the sense that even under these difficult conditions, we've been able to be nimble enough to reshape our strategies to allow us to produce these results.
Tonight we take you through not only the facts and figures regarding the bank's performance over the last 6 months, but find it reveals a dynamic reflex response that was created within the economic recession. Good evening, Ms. Mogopa. Could you kindly unpack for us the FNB half results that we just witnessed?
It's been an exciting and interesting 6 months for us at FNB. The highlights of the results are such that we had a 10% growth on the total balance sheet. This is in an environment where, difficult economic environment, the consumer is under pressure, the global and the local economy are actually struggling. So we are quite happy that a 10% growth has been achieved by FNB in the last 6 months. Now, getting into a bit of detail around that balance sheet, we've been able to achieve that by growing our property book by 19%, and we grew our West Bank book by 18%. We grew by retail book by 14%, and then corporate by about 8%. In total, as I said, a 14% balance sheet growth. Now, is that part of our strategy to have grown those books? Yes. We basically said that because of the tough economic environment that we are in, we'd like to grow more in our secured space as opposed to unsecured space. When I say secured space, I'm talking about your property, because it's obviously secured. It's less risky, for lack of a better word, as well as West Bank. Now, furthermore, we grew in the segments that we like to grow at. For instance, in property, we grew in the consumer space because there's still a lot of demand out there for Botswana wanting to buy homes and build homes. We grew very well in West Bank as well on the corporate space, because West Bank is participating in financing yellow metal equipment across the country in terms of these mining companies that are upcoming. So quite a solid balance sheet growth from where we sit. Now, what did that balance sheet do for us in terms of income statement? We posted a 17% year-on-year increase on the income statement in terms of PBT, which once again, it's a very solid performance. under the environment that we are in. And the PBT that we've been able to achieve, largely driven by net interest income. And we've been able to do a 21% net interest income, primarily because we've been able to sweat our balance sheet a lot more. When I say sweat, I mean that the assets that we have, we were able to diversify them towards higher interest-bearing assets. So if you look at the balance sheet in detail, we grew advances by 14%. We grew BOPCs, which is another alternative for advances, another alternative for assets, sorry, by 1%. So that alone gives us a space to grow in areas where we get a lot more interest income. Now, coming down in terms of the income statement, we've been able to also achieve a 14% increase on non-interest income. Now, that line also is a line that we are watching very closely as we continue to diversify our income in the bank. In terms of costs, overall 16% growth on costs. Now, if you break it down, we have about 9% growth on staff costs and 24% growth on operating costs. And the reason operating costs have gone up so high is really primarily from an investment perspective. At FNB, while we watch the cost-income ratio very closely, we are not shy to spend, particularly on areas that we believe are investment-driven. So, for instance, we've opened 2 branches in the last 6 months, one in Rail Park Mall, another one in Airport Junction. We've also been able to deploy about 10 more ATMs, taking our number to about 132 across the whole country. We've been able to also upgrade ATM software across all our ATMs to ensure that our customers access the convenience that we'd like them to have. We've also been able to roll out chip and pin-enabled speed points across our merchants in the country to ensure that, once again, the chip cards that we've been issuing to clients are compliant with this speed point machine. So all in all, as I said, 17% year-on-year increase in terms of PBT. Now, you spoke earlier about challenges. Let me go back to the other line that we're watching very closely as management. This is the impairments line. In the last 6 months, it has shown an increase of about 31%. Now, you'll remember that this is coming out of an environment where 2 years ago we had a massive public sector strike where some of our customers lost their jobs. Some have been employed, I believe, but some have not been employed. So it was a tough economic environment, as you can imagine. That affected our book. Over and above that, generally, our consumers in the market, because I spoke earlier about the credit growth in terms of consumer space. So credit growth is still quite high. That means that consumers are still borrowing money. But we also see in some trends that servicing those loans is also a bit of a challenge. We also see in some trends that the credit growth is going up, but the savings growth is not going up at the same rate. So there's a bit of a pressure on the consumer as a result of that. So all those factors affect our NPL line, impairments line, which is a 31% increase that I spoke about earlier.
The bank has demonstrated very well that they generated commendable results. But did these returns meet, miss, or surpass their expectations?
If you remember how I did my presentation, we had focused strategies around balance sheet efficiencies and around diversifying our revenue streams and around cost management, but not at the expense of spending, and also around a tighter credit risk management. So all those strategies were resolute, and we went and did them, and we achieved them. And I think that is why, once again, we are quite proud of the fact that we've achieved them and we can actually measure them and track them.
Forecast for the next 6 months before we have to all come back here again for the full year results.
I can tell you that from an FNB perspective, we remain very optimistic. I think as a bank, we've got robust and great strategies and a very committed and passionate team at FNB. The other thing that actually I suppose, humbles us is the fact that if you scan across the global economy, there are glimmers of hope around the recovery in the US, recovery in China. There's glimmers of hope, and when that recovery happens, that's good news for our diamond revenue. So the ripple effect then becomes that then the GDP growth of Botswana is improved. Then it means then that the revenues that Botswana receives are improved as well, as opposed to before, where they've been quite squeezed. Just with that, also the other thing that I need to point out also is that inflation has been 7%, around 7%. In the past, it went up to 7.4. Really, it's been ranging around the 7% mark. But Bank of Botswana remains resolute around the fact that they'd like to bring it down to a 3 to 6% target range. So Bank of Botswana is still very resolute, so we believe that inflation will be controlled to those levels, at least in the near future. So just from that, we believe that the economy will grow at least at a faster pace compared to the previous year.
Going back to the forecast over the next 6 months, are there any specific and new changes to the strategy or to be implemented?
Not quite, in the sense that we will pursue the sweating of the balance sheet that we keep on talking about. That we'll definitely pursue. We will grow in the areas that we find safe and secure. We will basically also focus on the segments that we believe that will give us growth into the future. We'll also focus on what we call the bricks to clicks. That is a continuous strategy. We started it some years back. What we are saying there is that we like to give our clients a lot more convenience, because the future really lies on electronic channels on your phone, actually. So we like our clients to be encouraged to move into the clicks as opposed to the bricks and mortar that happens in the branches, what have you. So when I talk about the clicks, I'm talking about go to the ATM to get your money. You don't have to get into the branch. I'm talking about swipe your card at the shop. You don't have to get cash. I'm talking about make transfers on your cell phone, send money to so-and-so on your cell phone. I'm talking about such things. You don't have to go to a branch to do those things. We'll continue to focus on such efficiencies. They're efficient for the bank, they are convenient for the client. So we'll continue to focus on that. I think the other thing that is quite exciting, particularly from an FNB people perspective, very soon we'll move into our new building at the CBD. It's called First Place. It's a very nice building, and everybody's looking forward to move into that building.
How are you hoping this move will help FNB and its business?
You know, we believe that from an employer of choice, which is one of the strategies that we have for our people, we believe that environment goes a long way in terms of just improving engagement. So we believe that it will work very well for our people at FNB. Also from a point of view of just consolidating, because as you can imagine, FNB grew in leaps and bounds in the last couple of years. By the way, we're only 21 years as of last year. But we've grown so much. We want to consolidate and not be in different areas. We like to be consolidated. This will help us with efficiencies because now we're all in the same building. So we're really looking forward to that.
As a bank that has an illustrated interest in the views of its stakeholders, FNB concluded the announcement of their half-year results by an opening up of the session to some feedback and questions from the floor. One of the more notable comments pointed out that the bank has shown satisfactory growth, but that dividends to shareholders remained the same 5 thebe per share as the previous year. The Chief Executive Officer of First National Bank Botswana, Lerato Ntakwana, readily addressed this concern, alluding to the aforementioned international Basel III requirements.
We are really trying to conserve capital at the moment to prepare ourselves for the coming higher Basel requirements, capital requirements. So that's really why we are a little bit conservative on dividends, but I'm sure we'll make more money in the future and pay higher dividends.
It is now time for the financial review of this past week with Thapelo Tseole of the Botswana Stock Exchange.
For this analysis of the market for the past week shows that the domestic company index has increased by 0.2%, And then this shows that it's in line with other African markets that continues to increase. The total increase so far for the year is 4.3%, which is a good return when you look at the previous year's returns. When you look at the foreign company index, it remained flat at unchanged, and this is good because for the past few weeks it have actually been getting negative returns. We look at the total value of shares traded this week. It's about 16.7 million pula worth of shares for the past 4 days of last week. On average, just about 5.6 million shares traded every day. One important message to the investors is that a lot of companies are actually looking at publicizing their annual results and their half-year results. And this is something that investors should be looking at because it shows how much return they are going to be earning on dividends and how much their companies are going to be performing going forward based on their strategy. And therefore, it's an important event for people who have bought shares in these companies and people who want to buy shares in these particular companies.
Our speakers tonight presented what has proved to be an effective, reflexive and comprehensive plan used to navigate the perilous space that is our current economy. We hope that you are encouraged not just by projections of an improved GDP and reduced inflation, but by their implicit demonstrations that it is possible to achieve year-on-year growth even in these challenging times. They illustrated that their winning streak is dependent on solid structures, solid strategies, and a solid team. From me, Nameto Sibina, the team behind First Issues, and our sponsors First National Bank, we wish you a good night and pleasant viewing.